Hey folks, how's it going? Happy PPI Friday for everyone that celebrates. Give me one moment, I'll be right back. Alrighty, so we've got PPI coming up pretty shortly here. Should be interesting. I don't know if it's going to follow the same path that we saw with CPI, but nevertheless, we're going to watch and see what the data tells us, and most importantly, what the market reaction is. The core expectation for today is 1/10 of 1%, as is the headline month over month. So any strong deviation from those numbers could cause a reaction in the market meaningfully lower, which would really be flat to negative PPI, would probably be good for rates and risk assets, and the opposite would be true if we have a much stronger than expected PPI. My threshold for that would be like -1, -2 month over month on core, be seen pretty positively, and +3, +4 on core, +3, +4 tenths of a percent, I should say, would be seen as pretty negatively month over month. Going into today, we have crude getting drawn down, a bit of a bid in the Nasdaq and S&P, but Nasdaq and Russell and Dow coming down a bit here. I'm going to bring the announcer on from Benzinga Pro so he can announce some of this stuff live as it's happening. So you'll just hear a slightly different voice than mine when major headlines are crossing the tape. And as we can see on screen here, we do have a wall of calls just above us here. This is going to be about 50-50 on SPX. It translates to about 50-67 on ES, about a 17-point delta between the two at this point. Let's check in on some of these other markets here. NASDAQ, as usual, pretty choppy pre-market. Again, not super liquid, about 6,000 on the bid, ask, spread, just going across the entire order book depth. Not a lot of liquidity there. Russell's even thinner trading than NASDAQ. And it's a bit lower this morning. Crude coming off of its lows. And the 2-year note showing higher rates, actually some of the highest rates of 2024 so far.
BAK, Braskem, popping to the high, $7.56, Bravo Alpha Kilo.
Sorry about that, guys. I'm fixing that now. I know that was way too loud. All right, we're going to go back to the S&P futures here. We're going to zoom in a little bit to the microstructure. Should be getting PPI data in just over 7 minutes here.
Shares of some Brazilian stocks, BAK, PBR, moving comments from Brazil's central bank head. Said activity in labor market remained resilient with inflation performing well. Trade balance continues to perform well, despite China's slowdown. Says interest rate differentials approaching a relatively low region.
Well, that's interesting. It's helpful to have the squawk on throughout the day. I don't parse every single headline and look into it extensively, but I at least like to see what's going on around the market. Sort of get a sense as to what we can expect. And of course, that PPI data will be coming out in near time. There's a slight delay, when I'm streaming, but not very much.
EPLP, Pop Culture Group, shares getting another move here. $6.50. Heavier volume coming in now on Charlie Papa, Oscar Papa.
Right then. That's interesting. Just a little bit over 5 minutes out from PPI. This is options expiration Friday. I posted a lot of info on my Twitter about that. Some of the things that we're watching, the distribution of what all is expiring. Sorry about that. And so definitely consider checking those tweets out. There's some good info there. One of the things that's always interesting is just looking at the sheer magnitude of zero DTE trading. About 50% of all SPX options trading is trading to expire the same day. And we do see some liquidity thinning out ahead of the data drop. This is often the case. You can see how much liquidity was there on Bookmap before. Now that we're about 5 minutes out, you can see that thinning out. This is one of the reasons that things can be a little bit more choppy. And as PPI comes out, I will be going through some of the data and seeing what it may mean. With PPI, if there is any acceleration, typically takes about 2 months to pass on to CPI and vice versa for deceleration. These are the producer prices. These are the things that may eventually pass through to consumers. It's always a little slower, if at all, on the way down than it is on the way up. We're seeing some officials make noise about that, like Lael Brainerd, saying grocers and retailers need to cut prices because they have really, really high margins after some of their input costs have come down. I don't think companies are going to jump at the bit to compress their own margins if they don't have to, but hey, here we are. And good morning, everyone. Thanks for tuning in. We're live on video here on Twitter too, experimenting with that. On YouTube, on Discord, on the Traderade Discord where I stream regularly. We're all over the place. Pretty cool. Got about 3 minutes out till PPI will drop. And New Squawk, I'll let him handle what all the info is, and I'll begin parsing it after it comes out. We also get building permits and housing starts, and then because we always want to have a never-ending parade of Fed speakers, Member Barr will speak at 9:10 a.m. Then at 10 a.m., we get University of Michigan consumer sentiment with the forecast being 80, the prior reading 79. 12:10 p.m. brings us Fed Member Daily, because it wouldn't be a real trading day if it was just one Fed speaker. And right now, cash implied open for the S&P is up about 0.15%, the NASDAQ up about 0.46%. Obviously, that could change in about 2 minutes here, where we get PPI data. Someone in one of the chats asked about NVIDIA. Just put the stock symbol with a question mark.
The producer price index for January, month-over-month, expecting plus 0.1%, core PPI plus 0.1%. Also, building permits and housing starts.
I would just say that next week, Wednesday evening, is going to be very interesting. NVIDIA earnings are something the whole market has its eyes on. And if anything, maybe things are getting just a touch speculative, touch bubbly.
New highs now.
In some of these AI stocks, I would say. And we can see liquidity's gone now. Look at that. It's just gone. There's nothing there. As we wait PPI data, all those bids and asks in the order book have just completely vanished. This is very typical, and this is why trading events can be risky. Data dropping in 30 seconds.
CPOP, $8.50 now.
Getting a pull in the S&P.
Core PPI plus 0.5%
Whoa.
versus plus 0.1% expected month over month. The PPI plus 0.3% versus plus 0.1%. That's month over month. Year over year, the PPI plus 0.9% versus plus 0.6% expected. And the core PPI PPI year over year plus 2% versus plus 1.6% expected.
Much hotter than expected.
Building permits minus 1.5%, 1.47 million versus the 1.509 million. Housing starts minus 14.8% versus flat expected.
Yikes.
1.331 million units versus 1.45 million expected.
That's not the best data drop overall. Core PPI coming in at 0.5% versus 0.1% expected
S&P
month over
futures
month.
are dropping here now on that higher expected inflation data.
They sure are.
Shares now at 50.42.
We're just right here at, I'm not sure why he's calling it shares or contracts, but we're right here at Gamma 2. We can see a large resting bid appearing below us, and then another stacking below that, and then the resting liquidity above us thinning out. So it does portend to some potential continuation. This is a pre-market reaction, so I'm not going to put a ton of weight into it. I like to see how the real trading session happens during cash trading hours, but nevertheless, this is hotter than expected data, both at the core level and the headline level, by quite a bit. And I think that continues to build into the concern of what we saw from CPI, which is this notion that maybe the fight against inflation, there's still more work to do. Maybe we get a little stuck at some of these elevated levels. So we're going to watch here this level. This Gamma 2 level is the second largest area of gross gamma exposure on the S&P options chain when we're looking at about 10,000 contracts. It tends to be a bit like support. If it cuts through there, I think we've got some continuation lower. These warm call and put levels on screen are from yesterday's most actively traded levels. They will refresh once the market is trading, but I keep them on there as indicators, just as reference points of where there was interest the prior trading day. Decent little iceberg buy there too. You saw that 550 appear on screen here. You saw iceberg radial get to plus 580. So there was some institutional interest down here to absorb sellers. Not a lot, but 550 isn't anything to 550 isn't anything to downplay pre-market, though. It's a decent-sized pre-market. Nevertheless, you still see price pulling down and look these resting bids building below as we start to cross below Gamma 2. Housing starts were also pretty big miss. The expectation there was 1.45 million. The actual number is 1.33 million. So pretty big slowdown there. I'd say that's probably relatively bearish for home builders and lumber futures. Home builders down 1.24% pre-market. So seeing XHB pull down 1.25% pre-market here. So certainly that housing data not well received by the home builders there. And we see a continuation of this pull lower. Let's take a look at the NASDAQ. Similar look, maybe a little bit more dramatic, but nevertheless that pull lower. Russell, big pull lower in the small caps here. Let's take a look at rates. I'm going to guess they jumped. Indeed, the 2-year gapping down, implying rates on the short end of the curve moving up. Similar with the 10-year, a little less dramatic on the 30-year. Gold smashed here too. Down on rising rates. Going to imagine the dollar looks stronger. Here's the euro dropping versus the dollar, confirming that indeed the dollar is moving higher. So we'll be watching this. This is definitely some interesting pre-market action. Today is OPEX Friday, about 2.4 trillion of notional rolling off, with 1 trillion of SPX options rolling off in the AM. Most of those around, you guessed it, 5,000. Seeing continuation of this pull here too in the S&P, in the NASDAQ, and in the Russell. Russell's got a pretty big set of resting bids below. You don't often see that in this contract. That does imply that if we're subscribing to auction theory, there are large participants that want price lower. And in all likelihood, given where trend is, these are reasonable near-term targets to see price come down to. Now, S&P implied open down about 0.2%. NASDAQ implied open about flat. Small caps getting hammered pretty well today. I'm going to put the live squawk back on as we approach some other data, and I'm sure we'll probably have some other headlines and stock activity to digest here. Quite an interesting Friday. Thank you, folks, for joining me. Hope this is helpful. It is always a lot of fun to cover these events and see what all is happening. As we talked about, we crossed below that second largest area of gross gamma exposure. We saw sellers pull the point of control down to that same level, kind of reinforcing the importance of it. And now we're just basing a little bit after we saw some passive buying, about 550 contracts on an iceberg buy.
GXAI, $1 now. Continue to spike here, up about 300%.
There's a stock, that GXAI stock, is absolutely surging pre-market here. And we continue to see Fed funds futures betting for that first rate cut after June. Remember, we went into this year with many betting on 6 rate cuts to start as early as March. That continues to be pushed off in the future. It aligns with what Powell said, which is that he really wants to see 6 months of continuing improvement in inflation data. And you could say that the data we're seeing this week for last month may be a small setback for them, hence the reevaluation of the Fed's resolve here. Now, in the trading day, S&P 5000, the cash index level 5000, and ES 5017 likely to be decent levels of potential support. Certainly a huge amount of positioning down at those levels as well. That's the largest amount of positioning on the entire chain. Posted some tweets about it, kind of joked around about it a little bit, but quite frankly, that amount of positioning has a huge impact, particularly when you have zero DTEs gunning it as hard as they were. Let's take a look around the market. We're going to take a look at the NASDAQ here. Looking just a little bit more sprightly than the S&P right now, but not by much. Similar look with the Russell. A little bit of a build off those lows. Crude stabilizing. Could call that a bit of a consolidation. And wow, rates continue to rise though. The 2-year continues to move higher in rates, lower in price. This is a recalculation of what the market believes is going to happen from the Fed. So again, less and less optimism about near-term rate cuts by the Fed is what we're seeing here. 10-year also showing us a little bit more concern about inflation. The longer end tends to express that. We certainly see that on screen. And gold continues to move lower. So the relative resilience in equities here is actually quite interesting. Coming up in about 30 minutes, we're going to get Fed member Barr adding his opinion to the discourse. I'm sure we'll get some headlines to digest from that. Then at 10 a.m., we have UOM consumer sentiment. And 12:10, we have member daily speaking. 2 Fed speakers on the dock today. What would a Friday be without Fed speakers adding their opinions?
GXAI shares continuing now $1.50 at the high.
Wow.
Gulf X-ray Alpha India.
That's pretty incredible. That thing is up 433% pre-market. Gaxos.ai or GXAI. This thing has a 9.25 million share float. Talk about tiny. And it's not really a short squeeze. There's only about 4% of that float shorted. There's a huge bid in this thing. It's coming down a little bit now. It's only up about 316%, but still the action in that one is pretty incredible. I'm not playing it. I'm not touching it. Just heard about it on the news wire from the Benzinga guy. But wow. What do they even do? Designs, develops, acquires, and manages games that offer non-fungible. Okay. They got 3 full-time employees. What even is this thing? An NFT gaming company? Are you kidding me? And of course, they then gravitate towards associating themselves with AI. You've got to love it. That is, let's see where they were over their lifetime. Okay, so at one point they were trading as high as $4.50. And before today's price action, they were trading at 25 cents. And what seems to be catalyzing this move is a headline: Gaxos Gaming to launch AI solution for game developers and studios, whatever that really means. They say it will be AI-powered creativity, seamless integration, dynamic content generation, customized solutions. These are not really specifics. I'm not sure why this thing has such a big bid on this. So, color me slightly skeptical. So let's dive into some of the things we saw in PPI. Give me a moment here. I'm going to parse some of this data. And we do see a bit of a look at S&P and NASDAQ stabilizing here after that draw. Let's see if rates coming off their highs. Prices for 2 years coming off their lows. They work in an inverse relationship, of course, here. Sellers pulling down the point of control pre-market further on S&P here. And we do see all that liquidity coming back. You see that gap back there right before and just after the event? This is why, again, it's so important to be careful when you're trading these things, because you can really get these very big moves in a short amount of time. But what's more important is you might not get the kind of fills you expect because of how fast the move is happening on relatively low liquidity. And we're getting a little bit of a continuation in this pull here. Let's see what the NASDAQ's doing. Not quite as weak as the S&P right now. And Russell's continuing to consolidate. 2-year rates giving us a little bit of relief. Similar look in the 10s. And now back to crude oil. Crude oil coming back up here. That typically puts a little upward pressure on rates. We'll see if that ends up being the case as the day goes on.
FUSN Fusion Pharma entered into exclusive worldwide license agreement with Heidelberg University and Euratom for actinium-based PSMA targeted radiotherapy. That's FUSN, Foxtrot Uniform Sandy November. MIGI Mawson announcing its monthly update for January. That's Michael India Golf India.
And so going into today's trading day, I think we do see some more concern about where inflation is going in the near term. Now, these two readings don't make a new trend, but they're still important to watch.
A report from NBC News. Federal regulators are probing whether Cash App leaves door open to money launderers and terrorists. That's SQ Block.
Well, that's interesting. So Barkin just came out not too long ago. Didn't even see him as a speaker on the roster, but he said January's economic data has been messy and not that good. I do think watching for a continuation in rising rates, putting pressure on equities is a theme. And it's something that we should be watching today, and particularly going into next week post-OPEX, where we'll see some real price discovery. There have been some pretty big divergences. These are things I talked about in navigating the markets. I shared the video with everyone last week as a courtesy, talking about really
now falling here at 68.30, down $1.
For me to be more confident about the market, I wanted to see a broadening of the rally. But on the other side, I felt like rates could be a big risk if they continue to rise. And we had some catalysts for that with CPI and PPI here. Also, last week, we had some really good treasury auctions, and yet rates were flat to higher. So I would say that that continues to be my concern. That's what the intermarket dynamics I'll be watching most carefully today. What are the 2s and 10s telling us? Also, what is oil doing? Because oil tends to put a little bit of upward pressure on rates when it's rising. And of course, the dollar is important as well. The dollar tends to move with rates rather than the other way around. Right now, you're seeing some pretty big moves here, pre-market, particularly looking at this resting bid in the euro moving down now, implying that the dollar needs to strengthen a little further based on where this large potential buyer wants price. So could be a bit of a risk-off day, but I'm looking at S&P 5000 and ES 5017 as really important levels. We could see ES 5017, that was the most active put strike yesterday. That's also the largest level of roll-off in SPX options and overall positioning going all the way out to December. So if we needed some volatility catalysts for OPEX Friday, we probably got those. Home builders was one of the segments I identified as diverging from the path of interest rates. Because if you think about it, typically home builders correlate reasonably well with the price of mortgage-backed securities. There have been some divergences, but typically pretty close, and it makes sense. You get, lower rates, you get more demand for homes. That helps home builders. The opposite is true of higher rates. And mortgage-backed securities correlate well with what? What is the 30-year mortgage rate correlate well with? Correlates well with the 10-year note rate, right? They're very, very, very lockstep in how they move. And so you see that divergence from ITB and XHB versus the inverted 10-year yield or the price of the 10-year note. And you saw that across a number of other areas of the market as well. Biotechs, the Russell 2000, a lot of rate-sensitive areas. That divergence was telling me that folks were not particularly concerned about the implied downside. And then if you go and look at the distribution of skew, premium was thoroughly more on the call side in a lot of these areas as well, right? And especially in some of these single stocks like NVIDIA, SMCI, Meta, there's really no concern about downside, which is a concern in and of itself. So you get those rate divergences and you get that really, really bullish positioning in options and futures and otherwise. Doesn't mean something, unfortunate has to happen. It just increases the probabilities of a correction in time or price, or both. Someone asks if the PPI figures already include rising shipping rates. No, I don't think that they do for the most part. Maybe for some of the goods where there were increases in price, but typically rising shipping rates take about 6 months to pass on because you have contractual negotiations. So I would imagine that there's going to be a delayed effect from that. It's also not necessarily going to affect the US as much as Europe. A lot of the stuff that's coming through the Red Sea is destined for Europe rather than the US. So hopefully that's helpful to you. One of the factors for the January rise in producer prices was a 2.2% increase in the index for hospital outpatient care. As we know, medical costs tend to rise at about thrice the rate of inflation, so not a huge surprise there. But still, nevertheless, a bit of a concern should it continue. Leading the January decline in the index for final demands goods was prices for gasoline, which fell 3.6%. Prices for communication and related equipment increased 2.4%. But yeah, energy was the biggest drag, as we could have reasonably expected going into this PPI year over year. Whether that continues to be the case is a whole other matter altogether. I think that energy prices are probably based, and unless there's a much more dramatic slowdown, we could see the path of least resistance being higher for things like West Texas Intermediate and Brent crude. And right back here to that lowered point of control on S&P pre-market. We're going to be opening here in just under 37 minutes. And that cash open brings about the expiration of about $1 trillion of SPX options, most of which are positioned around 5,000 on the call side, and then a pretty decent distribution of puts at 4,000. So obviously those puts are going to be expiring out of the money. The calls implied open says they'll be expiring in the money so far unless we pull down over 20 handles. More signs of escalation in the Gaza war. Lebanon's Hezbollah chief, feels weird even calling anyone anything, like giving them a nice title, as they're part of a terrorist organization. But nevertheless, the response to this aggression by Israel will be increased resistance. So, no signs of any de-escalation there, sadly. That tragic situation continues. And both sides are, obviously having a tough time. Anyone who's an innocent civilian on either side not having a great time there. So my heart goes out to them. I'm wishing for peace in the Middle East, as unlikely as it is. Not much conviction behind the bid that's kind of stabilizing prices here, but we are seeing a consolidation. If we want to zoom out a little bit more, you can see that drop that happened because of that PPI data release. Peak to trough, that drop was about 30 handles. So nothing to discount too much, but we're starting to stabilize a little bit here pre-market in the S&P, in the NASDAQ, in the Russell to a lesser extent. Crude oil continuing to move higher pre-market. And 2-year note futures giving us some rate relief after that really big spike. Retracing a bunch of that move now. Yeah, those options expire pretty much at the open for the S&P. I think that, someone asks or someone remarks, is it better to wait for 30 minutes to stay out of the way of OPEX? What I would say is, I would broaden that out a little bit, quite frankly. I mean, if you're not comfortable trading OPEX week, and there's no shame in that at all. It's a week where a lot of these statistical probabilities break down, where a lot of these relationships don't necessarily have the same gravity that they normally would when we're talking about probabilities and technicals and otherwise. And so, there's no shame in not trading OPEX week at all in equities. Just putting that out there. I know folks sometimes want to always feel like they have to have skin in the game. They always have to be trading, watching the market. This is a week where, a lot of folks just step away and do something else. I trade a lot smaller size on OPEX week in equities if I'm trading equities at all. So the first thing is, you're going to expect less probability alignment with your system. So that means lower confidence. So that means smaller size. Then you've got larger amounts of potential intraday volatility because of all this price agnostic position rolling. You got folks that have to roll positions. They don't have a choice. They have to. And so they're just going to do it. It's not going to be a matter of where the lines are on your chart. It's going to be a matter of where they have to transact, right? So that means smaller position size because you have that implied price agnostic volatility catalyst. So that, to me, means, you can employ slightly wider stops if you want to trade this tape. But in terms of the open, I like to look for 20 plus minutes of trading activity to see if there's an opening range and how big that opening range is before I even decide whether I'm going to take a trade.
Getting a pop here, low volume, Oscar Charlie Golf.
So, for OPEX Friday, it's not a huge OPEX compared to some that we've seen, particularly like December, but it's still potentially going to be a pretty choppy trading day, particularly with some of the event volatility catalysts we got pre-market. So I'd be watching rates. I think rates will give us a little bit of sign where equities want to go. We saw, that relief in rates start at 840, right? And then the relief in equities is following minutes later. That's not a coincidence. The rate markets often lead. So watching rates today, I think, is going to be most important.
Oriental Culture spiking on low volume, $2.28, Oscar Charlie Golf.
Yeah, we do have, as someone points out on YouTube, we do have more data. UOM, University of Michigan Consumer Sentiment, coming out at 10 a.m. The expectation is a reading of 80. The previous reading was 79. And in 10 minutes, we also have FOMC member Barr speaking, so we'll probably get some headlines out of them as well.
CNEY, CN Energy, naming a new CEO. That's Charlie November Echo Yankee, CNEY.
You guys like my co-host? It's the Benzinga squat guy. He's awesome. He's not actually co-hosting. He's just sort of broadcasting this out to the world. But
OCG, Oriental Culture, up more than 300% now on increasing volume now. Oscar Charlie Golf, another China stock, OCG.
I really hope everyone's had a great trading week. It has been all over the map. And again, OPEX week is like that. That's one of the reasons that it's a good week to be careful. Yeah, if you're finding yourself paper handing trades, take your position sizing down, reevaluate your system,
Foreman announcing,
kind of look at what is causing you to get in and out of trades.
Of its Cooperage in Trinity, Alabama. That's Bravo Foxtrot Alpha, Bravo Foxtrot Bravo.
I find that if I'm not having trades working out, sequentially, then I'll take a step back and figure out what exactly is not going my way before I start trading whatever it is that wasn't working properly. Because, you have to be aware of the market regime. You might have a system that works really well during one regime, but then you get into a different environment. Like maybe you go from a market that's, constructive and there's more demand than supply, so you're moving higher, and then you get to a market that's more in a consolidation phase, and your system doesn't work in that consolidation phase. So that awareness of the regime you're in helps you to decide what kind of trades you're going to put on, what kind of risks you're going to take. And, some folks just don't trade certain regimes well, which is fine. Know what you trade well, know how you trade, know what size is comfortable for you so you can become more consistent. And most importantly, have a system. Always have a system when you're trading. You should understand what your risk is before you even put a position on. You should have a plan that is defined before that position is put on so that you know exactly what you're going to do. Up or down. Risk succeeded, stop out, move on to the next trade. Don't look back. Works in your favor. Maybe you have a price target or an area where, momentum is slipping and you get out on that account. Whatever works best for you. I like to backtest strategies. So I spend a lot of time nerding around, looking at different instruments, different entries and exits and risk management. And backtesting doesn't mean that past is prologue, but it gives me a better sense as to what might work. And it also helps me to backtest during specific regimes, which is something that I think is maybe not discussed quite enough. Like you can always backtest over 20 years of data. That's fine. But what if you backtest a strategy during a bear market and then you backtest that same strategy during a bull market? You may find completely different results that might help to guide you during those different regimes. That's one of the things that I think is probably one of the most important things if you're going to be more systematic in your approach is just regular backtesting of strategy and over, regimes that you can identify that match up with the regime you're trading. And then defining those strategies so that you know exactly what you may do in X, Y, and Z event. You can even create alerts. Like if you're testing on a system like TradingView or TrendSpider, or you write some Python code, you can generate alerts where your entry and exit signals may be firing off. I hesitate at the point where we start going full algo, just because I know how, off the rails things can go sometimes, but I like at least having the opportunity to generate signals. I think that can be helpful to us. So like when I was lining up some of these short squeeze trades like Morrow, which was a near triple over December, and GCT, which was a double, and some of these others, it was actually not just like, hey, look at the chart, this looks cool. It was back testing these parameters over similar regimes where you had really, really concentrated single stock short interest by hedge funds and where there was a catalyst, right? And then certain parameters like float and volume and otherwise, putting that all together and finding where there was the highest probability of positive price scenarios. And so I came up with some trades, and many of them worked out quite well, but it wasn't because I just, took a stab at it. It was because I did a lot of research and planning ahead of the event. I didn't even know if it was going to happen, right? You never know if these things you're backtesting for are necessarily going to play out in the time frame you're looking for, which is why it's so important to have those alerts, because you might be in a completely different frame of mind. You might be thinking about something different, and then all of a sudden one of these alerts fires off, and you're like, oh yeah, I remember that.
GDC, another play here, moving here, $2.89, Golf Delta Charlie.
You got bar coming out in about 3 minutes. You should see some headlines cross the wires. Let's take a look at some of these markets here. I've been rambling about trading for a bit. Hopefully that was something y'all enjoyed listening to, but we'll get back to the business of doing business here. Liquidity has really improved as we approach the open. You can see a lot more bids and offers right within proximity of price. We also can see that VWAP and the point of control are converging a bit near Gamma 1. That really emphasizes just how important that largest level of gross gamma positioning is for this market. Let's take a look over here at the NASDAQ. NASDAQ building here from its lows, looking similar to the S&P, maybe slightly better, but quite similar overall. And we do like to see the NASDAQ take the lead one way or another. It tends to be the momentum leader. You do see a reasonably large resting bid below here, just at 17,910, about 96 contracts. Russell had a nice pop and then faded back to the point of control, got a clean bounce from it, now starting to build. A lot of resting liquidity on the Russell today. This is not typically what I see. Crude continuing to build higher, now 78, 67.50 on the front month contract. And 2-year note rate starting to rise again as price falls after that nice recovery. We'll see where we were. So we basically just kind of retraced a little bit, like 3/4 of that move lower. Gold rallying from its lows, but still not looking amazing here. And then, of course, we've got the euro, which we look at as a proxy for the dollar. And it's also retracing some of that move where it dropped earlier. So that's all relatively good to support equities, that these things are retracing. Helps to prevent further downside, perhaps. Red Sea disruption is buoying diesel prices in Europe. As we discussed earlier, Red Sea having a bigger impact on Europe than the US. And that GXAI stock fading a bit pre-market here, now barely clinging on to $1 before it was up over 400%, now up just 289%. But still, that whole pop on that headline feels a little suspect to me. It was a press release too. Fed's bar says examiners conducting additional examinations of firms with large unrealized losses or other vulnerabilities, speaking towards, the banking system at large, says bank supervisors are issuing more findings and downgrading bank ratings at a higher rate in the past year, Bank supervisors are closely focused on commercial real estate risks. And we could drill down into that a little bit. It has a lot more to do with office buildings than anywhere else. That's where there's the most distressed debt. And it's certain key areas. It's not like every office building loan is distressed. There are certain key pockets of weakness, most especially major metropolitan areas, San Francisco really leading that charge lower in commercial real estate prices of office buildings. And with high vacancy rates. So you have debt really becoming more problematic for those that have been issuing it. These smaller regional banks are the biggest issuers of that debt. So this is not like a credit event. We don't need to, look out below. We're all going to die type of thing. I know a lot of folks have been talking about that a lot. Doesn't mean that it's not going to cause problems. It will. There's going to be problems in small and mid-sized regional banks because of this. But in terms of it being a catalyst for some kind of apocalypse, as some folks have called it, I just don't buy it. The pressure is just not strong enough, and the distribution of these loans is largely in smaller and mid-sized banks that we've seen regulators already have a process for winding these things down with minimal disruption overall. So I don't think that's going to be the big left tail, in my humble view. Yeah, and SMCI is the largest holding of the Russell 2000. It's over a $50 billion company. It's accounted for the majority of the Russell's gains this year. One stock. So it's too big for the Russell 2000. I imagine it gets rolled up to the Russell 1000. Doesn't necessarily automatically mean it's going to be included in the S&P 500, by the way. But typically is the case for the Russell that they'll move it up to the Russell 1000 when it becomes a larger market cap company, as it has. Fed's barking, switching gears from bar to barking. CPI data confirms why the Fed needs more confidence to cut. So Fed speakers are continuing to try to downplay the eagerness of the market for the Fed to start cutting rates. And I think they're right. I do think the market got way ahead of itself. We're near all-time highs in stocks, housing prices, Bitcoin is at multi-year highs. You've got plenty of liquidity in the banking system. They're getting back into all their lending activity. Financial conditions are easing significantly. So much so that financial conditions have eased from before they're easier now than before when the Fed started hiking in 2022, which tells you a lot. Okay, so there's no really strong reason for the Fed to start cutting here. I know some folks have prognosticated maybe it has to do with the election. Maybe, but, I don't necessarily know that that's going to be the primary driver of rate cuts. I think if anything, it'll be more the Fed trying to get to a point where they can say, we feel inflation's under control and financial conditions are tightening and real rates are too high, and maybe they'll cut 25, 50 bips into that in the back half of this year. Maybe. That would be my base case. The whole idea of like 6+ cuts as we came into the year with, which has now been downgraded to less than 4, by the way, by the market, that's still a little aggressive, in my view. With everything that's going on, it would be a policy mistake to do something like that in this environment. You could easily see a reacceleration of some of these inflationary forces if the Fed decides, hey, we're going to cut when we don't need to, and where ostensibly everything is okay. That just stimulates demand in areas of the world that could be demand constrained, and that could bring back some of that inflation. Looking back at the most recent services PMI, the prices index surged the most it had in, I think, 2 years. So that's telling you that services providers are paying higher prices. They're likely to pass those on. And then we have CPI and PPI kind of showing similar, that there's some more pressure in the pipeline. Now, I don't think this means we're going to have this huge reacceleration of inflation in the near term, but I think it does mean that if the Fed was to cut into an environment like this, it could catalyze that outcome. For now, though, we're back at Gamma 1, and buyers have pulled back the point of control to around that same level, further emphasizing just how important this level is going to be in today's trading day. Taking a look at the NASDAQ, we've got still those large resting bids below, not many large resting offers above of the same size, so that's something worth watching. They're thinning out a little bit below us, though. Russell's order book is pretty darn busy. Look at all these resting bids and offers in the Russell. You don't typically see that. They are meaningful. I would be watching these levels pretty closely today. Crude continuing to build here, 78.65. And to your note, just sort of flat here, pulling down that point of control. Yeah, as someone mentioned Bitcoin in one of the chats, and it's definitely been incredibly strong, and it's just another sign that there's plenty of liquidity out there. If there's that much liquidity to buy crypto, then where's the reason for the Fed to cut? Where's the reason for them to taper QT? Again, I have a really hard time seeing it, so it's interesting. Oh, here we go. The Fed's speaker, Barr, his speech was halted by climate change protesters because we all know that the Fed is responsible for climate change. So surely those protesters have the right idea in mind and this will be very effective. Good grief. That's just silly. I remember when Powell said close the effing door to the same people. Huh. We'll see if Barr is able to get back on mic or not. Let's take a look around the market again here. NASDAQ consolidating, point of control pulled up a bit by buyers. Just a bit of a flat trade here ever since we got the reaction to PPI. Retracing some of that weakness, though, which is good. You've got the 2-year note starting to roll over a little bit here. Remember, there's usually a little delay between rising rates and dropping equity prices, so we'll have to keep an eye. But we do see rates start to come back up a little bit here. Just about 10 minutes out from the cash open. We've got gold following again here. That's another sort of proxy for rates as well. Since it doesn't yield anything, it's always competing with rates. It's close now to the lows post PPI. It's actually quite a bit weaker than many of these other instruments are. Let's take a look at the 30. 30s never really got off the mat. 10s. 10's got a nice pop, but they're retracing. Let's look at the euro here. Euro also got a nice pop, but it is retracing. So gold's the weakest of the bunch, but they're all showing a similar look here, which is not necessarily great for equities, but again, it's OPEX week, so rates may not have the same level of influence this week that they do next. That GXAI getting rebid pre-open. I think that's a pump and dump personally, but it's bid up 344% now to $1.15. Someone asked if I have any strong opinions about the iShares Bitcoin Trust versus coin or MicroStrategy. I mean, my opinion would be it really depends on what the goal of a speculator is in terms of gaining exposure to crypto. These are all, in my opinion, trading vehicles. I don't necessarily want to be long them for a long period of time. I'd rather just be using them as sort of a beta harvesting mechanism, if you will. So, whether it's iBit or Coin or MicroStrategy or Mara or any of these other things, I would say the cadre of stocks in this group tend to be beneficiaries of short squeezes that are episodic, right? You get these episodic short squeezes. They drive a lot of interest into, one of these stocks in the form of near to the money, close dated calls. That asymmetry that call buyers have, pushing dealers to delta hedge and buy shares at very large sizes, tends to push up prices. It also tends to squeeze shorts out. You get momentum traders interested. So it tends to be kind of like a trifecta. Do those same trifecta of catalysts exist in something like iBit? Probably not. So, the positive side is it'd probably be relatively more stable than some of these companies that are involved in the crypto space, particularly the smaller ones like Mara and Riot. And on the other side of it, though, I'm not sure you're going to realize the same amount of trading opportunities. But, to each their own. iBit has about 2.72 billion in assets. It's a liquid trader. Average volume on this thing is 17 million units traded per day. And yesterday's volume was 22.4 million. So liquidity there is great. I mean, if you're using it as a trading vehicle, I would say it's, if you don't want to trade Bitcoin futures or Bitcoin itself, for that purpose, it seems quite well suited. It's got a pretty modest expense ratio of just 0.12%. I mean, okay, so the person further clarifies they were wondering if they could watch iBit instead of tracking the whole group. I mean, you can get real-time data on crypto, so you may as well just track spot Bitcoin prices. I think of all the things to track, the proxies of it, the derivatives of it, may not give you the same level of signal and immediacy that the actual spot Bitcoin price does. So that would be my thought. Just track spot Bitcoin if you're really interested in the group. Just about less than 6 minutes out from the cash open. At 10 a.m., we do get consumer confidence numbers from the University of Michigan with expectations of 80. Bloomberg running a headline, rising PPI signals persistent inflation, which is one of the concerns that we were talking about a little bit after the data came back to us from January. And this is the highest PPI reading we've had month over month since the data set that was reported for August. It does warrant concern. Again, one print doesn't make a trend, but this means there's about a 2-month lag and there's some more potential upward pressure in CPI to come. Now, we know the Fed's favorite flavor of inflation is PCE, which we will be getting later this month. And I think more attention will be focused on that, particularly for how rates and Fed funds futures are trading. And remember, with PCE, they tend to have a lower weighting for shelter, which was one of the drivers of CPI moving higher. Inflation expectations, yeah, that's a great point. We will see from the University of Michigan those inflation expectations. I do not have the expectations right in front of me. Let me see if I have them over here. Okay, so the forecast for 5-year inflation expectations from the University of Michigan is 2.8%. Prior reading was 2.9%. The expectation 1 year ahead is 2.9%. The prior reading also 2.9%. Those data points coming out at 10 a.m. with University of Michigan sentiment. Let's take a look around the markets here as we just have about 3 minutes until the open. S&P just continuing to ping that point of control that has been pushed up again by buyers right around Gamma 1. I think this point of control, VWAP, Gamma 1, this whole cluster is going to be really important. If we can break decisively above it and build acceptance, I think you could say buyers are starting to take control, particularly if we see that as a part of that first 20, 30 minutes of trading. On the other side of it, however, we've got to look at the downside here. And I think that if we start to trade below 5,000 on S&P in particular, that gives sellers control over the longer time horizon to start trying to push this thing lower. There's so much gamma positioning at that level. It ends up being a really, really important level to watch. It was where there was a lot of interest in puts yesterday during the trading day as well.
EIS Disney board member Carolyn Everson says we have not seen a strategic plan or idea from Nelson Peltz that will see him in the boardroom. That according to a CNBC interview. Delta India Sandy.
I feel like that's kind of like shots fired against Nelson Peltz, basically. Like, the dude has no plan. Yeah, so in terms of gamma output on the Gerbot on our Traderade Discord server, that data is always available, but you do have to use capital letters when querying a stock symbol or ETF symbol. You can also use an index if you put an underline in front of it. And that's full chain gamma. We will have 0 DTE gamma and volume next. Coding all this stuff myself, so I'm a team of one. But I'm doing the best I can to get all these cool features out there for folks, because I know this is really important data, and we have built some of the coolest tools to be able to watch it. Just like this SPX options visualizer you all can see on screen, that's something I just released to the public as well. It's on the Bookmap Marketplace. You got to have Bookmap and a data subscription to use it, but I find it quite handy. Just about every trading day, you can see the influence that full chain and 0 DTE trading have on price discovery. It's about less than 1 minute until the cash open here. Excitement builds as we've got about 1 trillion of S&P 500 index options rolling off in the AM. Most of those positioned around the 5,000 strike. And a fair amount of puts around 4,000 as well, obviously expiring out of the money. And there's the opening bell. Usually you'll start to see liquidity build up a bit, and you certainly can see that as we get into the open.
The market on open imbalance, 130 million to the sell side.
U.S. markets are now open. The S&P 500 futures are about flat at 50.43. Crude up 0.3% at 77.82. Bitcoin up 1%, 52,475.
Now, we don't have those same supportive flows in the AM session from the decay of the value of puts that we saw earlier in this week. So it may be a little bit choppier in that first hour. And it wouldn't be a trading day unless there were large volumes of SMCI and Tesla and Eli Lilly and Microsoft options trading. And we're starting to see some of those flows coming online here. So I'll be looking at some of those unusual options flows as the morning progresses. A lot of that trading happens in the first hour as well. Getting a bit of a pull here below VWAP, point of control, and Gamma 1. Again, that is a really important pivot level, I think, intraday. Do see a little bit of passive distribution, iceberg radial falling lower. Now, I look at this as being more important when we're in the 4 digits one way or the other. Right now, it's pretty low. So we'll see. This is tracking over the last half hour of accumulation and distribution activity in icebergs. But if we can't break above Gamma 1, I do think the path of least resistance is lower intraday. And then over the longer time horizon, SPX 5000 and ES 5017 is a pretty important pivot level, given the amount of options positioning around there. And we are seeing a little bit of a pull here. We do have this larger resting bid just around 5030 ES. And then going further below, we can see yesterday there was a lot of interest at these two put strikes as well. And we see further liquidity building below and some thinning above. Let's take a look at the NASDAQ here. Wow, that's not a good look. Getting a pretty decent pull there on reasonable volume. Right out the open. See the Russell. Russell's just doing its own thing, going the exact opposite way. Maybe some short covering there. It's a very concentrated short bet by hedge funds to reduce their value at risk in their long positions that are largely concentrated in the Mag 5. Crude oil continuing to build higher, probably surprising very few people. We're above that 76 pivot level that I've been watching, and above there I feel like buyers have control. And we certainly have geopolitical tensions to put a little bit more interest in longing crude and covering some of the shorts that systematic traders have gotten into. Rates seeing a little bit of relief right up to this point of control here and then resistance. And gold, I think spot maybe just barely above 2,000, but the front month is challenging this point of control, trading at 2009. And then the euro stabilizing after that fall earlier, retracing some of those losses, implying that, from the strength in the dollar that we originally had, that is now weakening a bit, which is generally reasonably good for equities. But nevertheless, we see the SPOOs pulling lower. We see that resting offer at 50.30 growing here. Do see some bullish flows in the semiconductor ETF. About 137 million in premium paid for the 207.50 call strike to expire March 8th. And you also have more puts being traded on SMCI for that 1,000 strike, 367,000 in premium paid.
AMZN, Amazon shares at session lows.
Oh dear. And we do see sellers pulling that point of control lower as we've seen some volume building here. We'll zoom a little bit into the microstructure we can see on screen. And we'll also take a look at the NASDAQ. NASDAQ looking comparatively a little better than the S&P in just the last few minutes here. And Russell continuing to build on this recovery that it has seen. Quite interesting dichotomy in that one. Rates giving us just a bit of relief on the 2-year. But again, this is a retrace after quite a big fall. Doesn't look like Barr is going to come back online. Those climate protesters completely took him out of the speech, and I don't know what all happened there, but geez. Let's see what some of the other popular shorted proxies by hedge funds are doing. ARK is down 0.7%. XBI is down 0.7%. They're both recovering a bit from their lows here as we see the NASDAQ and the Russell get a bid. NASDAQ's pushing higher than the S&P over the last 5 minutes, showing some relative strength in comparison, but Russell, also showing that similar look. And over here in crude land, a bit of a pullback from the recent highs. Now getting a continuation of that pull in the S&P. And continuing to see that point of control pull lower, we were not able to break above Gamma 1 or VWAP decisively. We had a couple of head fakes, but now we're reversing lower, and we can see resting liquidity below us at this bid at 50.30 continues to grow. So I'd say, everything we're seeing so far increases the probability of this being a down day. Still want to see how that 20-minute opening range resolves. But so far, we are continuing to make new cash market lows. And quite interesting, you see some of the lower quality proxies getting bid, XBI, ARKK, these rate sensitive areas of the market. But you see the NASDAQ pulling, you see the S&P 500 pulling, and you see the Russell rallying. So to me, this is a day of dispersion, and part of that dispersion is being driven by the insane level of gross leverage that hedge funds have on. If you think about it, they're running 260, 270% gross leverage, depending on whether you're looking at Goldman Sachs or JP Morgan prime desk data. And that implies that with that concentrated short positioning in the Russell and some of these single stocks, when their longs go against them, like when there's a distribution in the NASDAQ, for example, they're going to cover their shorts at the same time. So you get this effect of NASDAQ down, Russell up, just as oversimplifying the flows that happen. Look, Russell's breaking to new cash highs, NASDAQ new lows. It's almost as if it's playing out before our very eyes right now. It's not that there's a rotation into small caps happening here. That might be a very small part of it, but I really do believe it's what we call degrossing, or reducing overall leverage. Yes, definitely a bit of a squeeze. So like for hedge funds, the pain trade is Russell up, NASDAQ down. We do see that resting bid in the S&P growing a bit below us, but we also see a little more liquidity coming in on the offers above that point of control. And we're just about 17 minutes out from getting UOM consumer sentiment and inflation expectations data, which I think will be an important data point, particularly the inflation expectations after CPI and PPI this week. Let's take a look at some of the unusual flows going on in the options market. Tesla 210 calls for next Friday, 125,000 in premium paid there. SMCI 1,200 calls with 137,000 in premium for next Friday. And then NVIDIA 740 calls and 780 calls for March expiration. And between the two of them, about 320,000 in premium paid. So definitely seeing some of that continuation of speculative call buying flows, and not nearly as much on the put side. So that could be just an early indication of where sentiment lies here. People are still bullish of these AI plays.
SFT, Microsoft seeing session lows here.
Wow, Microsoft and Amazon having those pulls. Interesting.
DraftKings also seeing session highs.
Donkey Kong. That's what I call DraftKings, for those that don't know. Because it's DKNG. How could you not call it Donkey Kong? Still pulling lower in S&P. Still have liquidity building below us here. NASDAQ, not quite the same look. A little bit more of a consolidation look, but looks quite weak overall. And then Russell's pulling back, but still relative strength from the cash open to the present in the Russell versus the other indices. Oil's continuing to consolidate here. Rates are moving a bit lower on the short end and on the longer end, making up, again, some of those losses that happened post-PPI. And gold bouncing off of that point of control. Finally, the euro here actually looking pretty sprightly, making up a lot of that loss that we had post-PPI. NASDAQ makes a new cash session low, bouncing a little bit off of that there. Saw some folks getting stopped out. That red dot with the 94 next to it indicates that there were 94 contracts stopped out, buyers that had to sell those contracts. And the blue icons on the screen are indicative of icebergs, but when they're below, they're buys. When they're above, they're sells. NASDAQ continuing to look pretty weak. Again, the NASDAQ tends to be the momentum leader one way or the other. So seeing it pull like this does have me a little bit concerned about the potential for continuation to the downside. We're about 3 minutes out from forming that 20-minute opening range too. So we'll be able to get a better sense as to what directionality may be. Again, the caveat being this is OPEX week. So those probabilistic outcomes are a little bit more distorted because of price agnostic flows happening as positions have to be rolled. And we're starting to see our most active options activity populating in the SPX options visualizer. This is a tool I recently built for Bookmap. It's available on their marketplace. We can see the most active calls just quite a bit above spot. Most active put not too far below. We have these chartable end and text levels on our Discord, but you can also see them live on Bookmap right here on my stream. Why do I plot these levels? Because zero DTEs and options flows in general have a really big impact on price discovery. The midpoint is on screen. Midpoint is matching right up with VWAP. This midpoint is generated when the flows in the most two active calls and puts are within about 20% of each other of total aggregate volume, and it tends to be an important level, particularly when there's coalescence. And indeed today there is with the point of control and VWAP. So you could say we're a little bit more in balance here. Trading Donkey, I used to use Fibonacci extensions, but nowadays I use zero DTE and gamma positioning because it tends to be on the dot.
With a range of 85 to 74 spot 2. 1 year inflation prelim forecast 2.9% on the prior 2.9%. 5 year inflation prelim forecast 2.8% on the prior 2.9%. Condition prelim forecast 82.5 on the prior 81.9, and expectations prelim forecast 77 on the prior 77.1.
We got a couple of new squawks here that join me on the feed for fun to help you all get all the information, and so that I'm not constantly talking. So I'm sure you get tired of hearing just me. I find that kind of helpful. Hopefully it's helpful to you all as well. Those are from Benzinga Pro and Financial Juice, who are both partners of Traderade. We like their stuff quite a bit. And so that's why I'm using it as a part of the stream. And still seeing that continuation of a pull down into this really large area of resting liquidity on the S&P. Let's take a look at the NASDAQ here. Yikes. That's not a good look at all. So tech is really showing us some weakness overall. Microsoft making new lows intraday. Amazon pulling back, but, off of its lows here. Google making new lows. Tesla close to its lows, Meta making new lows, Apple making
S&P
new
futures
lows.
seeing some session lows, also seeing microchip names, MU, AMD, SMCI, all seeing some new lows.
Iceberg ESH for CME buy at 50.30 crossed 500.
Yeah, wow, that was a
Top
pretty big...
ESH for CME sell at 5,029.48 volume 585.
Oh, did I forget to mention I have a robot on the stream? I have a robot on the stream. That's Bookmap actually live discussing order flow when it gets really big, and I should go look over there at the screen and we can see why. Look at that pull. A lot of weakness in tech today. You can see why the NASDAQ is pulling as much lower as it is. And the Russell's relatively resilient, not seeing the same distribution from the cash open that we're seeing in the NASDAQ and in the S&P 500. Got a little bit of institutional iceberging there into that last stop run, but not enough to dissuade sellers. We continue to see this pull. Remember, we've talked about 5,000 being a really important area. Look at where the most active put strike is. That's S&P 5,000, ES 5017, exactly the level we were talking about, an hour ago? So watch that level. It's important. If we break below it, sellers start to gain control over a longer time frame.
And S&P futures continuing lower here, down 0.4% on some increased volume.
Yep. That pull continuing, even though there isn't as much volume right now as we saw in some of this distribution earlier. That pull is continuing. I think it's pretty much
At 10 a.m.
destiny.
Eastern time, we get University of Michigan data, sentiment.
Yeah,
prelim
5,000.
forecast 80 on the prior 79, with a range of 85 to 74 spot 2. 1 year inflation prelim forecast 2.9% on the prior 2.9%. 5 year inflation prelim forecast 2.8% on the prior 2.9%. Condition prelim forecast 82.5 on the prior 81.9, and expectations prelim forecast 77 on the prior 77.1.
See another reasonable size resting bid appearing below us here as we get drawn down. S&P down about 0.5%, approaching that really important 5,000 level. NASDAQ pull, just violence. Look at that. That's pretty nasty. NASDAQ's down about 0.75% here. And Russell had a pull here too. It's starting to bounce a little bit off of that. Oil pulling back down below that point of control, giving sellers a little bit of an advantage intraday. Rates continuing to move lower. 2-year has a bid now that almost makes up for that whole move. Let's see what UOM brings it and what those inflation expectations look like. Gold pulling back now below that point of control, and the euro continuing to move higher, again, making up a lot of that post-PPI drop.
FedSpar says we want to be flexible in conducting Fed stress tests, so FedSpar is answering questions after his remarks.
It's about a minute away from the data release from the University of Michigan. We'll be getting 1 and 5 year inflation expectations and consumer sentiment. Not your typical Lotto Friday. All the typical beneficiaries of that same flow really seeing it go the other way, and it makes sense given the call skew. We talked about that a little more earlier, that the amount of call skew on some of these really heavy Mag 5 trading vehicles had been so distorted to the call side that it would have taken a lot more positive flows to keep that upside going, particularly names like Nvidia and Meta and Microsoft and some of those that are pulling back today, Amazon, Google, and otherwise. So that gives us a little bit of a sense as to why some of this is happening. It's a heavier lift. There's so much betting on further upside that it begs the question as to whether that further upside is really going to happen in the near term, right? And pullbacks are healthy. A correction in time or price or both is not a bad thing. In fact, as a long-term investor, seeing the markets just go up, up, up and away without taking a breath is way more concerning. I'd really prefer to see some pullbacks as a healthier market, a more normal market. Like the last, going into this week, 14 of the last 15 weeks were up, which hadn't happened since 1972. And the S&P was bid up about 20% in that time, which had never happened before. So again, not exactly normal. Quite an unusual market environment.
10 seconds. $79.6, 79.6 lower than forecast. 80 5-year inflation prelim 2.9%, 2.9% higher than forecast. 2.8%. 1-year inflation prelim 3%, 3% higher than forecast. 2.9%. Seeing a little bit of downside in the S&P. Expectations prelim 78.4, 78.4 higher than forecast. 77. Condition prelim 81.5, 81.5 lower than forecast. 82.5.
So we did get that UOM data. Came in lower than expected on consumer sentiment, that preliminary reading, and higher than expected on 1 and 5 year inflation expectations, just by about 10 bips. That caused the market to pull back just a little bit here. We are testing that level that is of great consequence. That is SPX 5000 or ES, just around 5017. Yeah, there is someone asks on the Traderade Discord, is there a way to see 0DTE SPX gamma here on the Discord? So just take a look at the bot queries channel, and there is the ability to do it right there. Oh dear. By using the exclamation point SPX0 command, and all the commands are up there in the topic. You can ask the bot for a list of commands as well, but using SPX0, bang SPX0, will show 0DTE gamma for the S&P, both net and gross exposure, as well as options volume. And I will have this functionality built out for every optionable stock and ETF that trades on CBOE next. So be a lot more than just S&P soon. But hopefully that helps. So I say the reading on the University of Michigan number here is it's not a big mover of price. The what it came in at versus expectations was not that big of a deviation. So not necessarily something to expect the same level of reaction from the market that we saw from PPI. You can see some resting liquidity just building right above us here on S&P around 50.25. Seeing price gravitate towards it, pull that liquidity. NASDAQ starting to possibly look like it's trying to slow down this decline. I would be hesitant to call this a reversal of yet. And Russell again showing a little bit more resilience than the rest of the market on short time frames. Still seeing some more relief in rates, which is generally decent for equities. Let's take a look at some of the options flows here. A lot of call selling today overall. In Meta, SMCI, JP Morgan, AMD, Nvidia, decent amount of call selling across those. Some put buying in Uber, SMCI, and Triple Q. Triple Q is probably a bit of a hedge. Oh, it looks like Barr was able to come back and at least make one last headline-worthy quote. I want to be flexible in conducting the Fed's stress tests. We'll zoom in a little bit to the microstructure here on ES. We still see that this put strike around SPX 5000 is the most active option on the chain, and that puts are seeing more volume than calls. That's what that asterisk is telling us there. NASDAQ continues to show relative weakness versus the S&P and Russell, relative strength. Again, shorter time frames. Oil is getting a bit of a bid off of its recent lows, now pulling down that point of control. And two-year yields continuing to fall, almost making up that whole gap down this morning now, post-PPI. That's relatively constructive for equities. Similar look in the 10-year note futures, plugging that gap a bit. It's got a little bit more room higher in price, lower in yield. And the 30-year bond, similar look, although a little bit more subdued than the 10-year. Then we've got gold. Gold is pushing off of its lows here. It is following rates lower with gold moving higher. It tends to trade inverse, similar with the euro, which is almost fully recovered from that drop, implying that the dollar has come back down. At 12:10, the Fed's daily will speak, so assuming their speech is not interrupted by climate protesters, that could also cause a little bit more volatility. An ex-Goldman analyst was jailed for 22 months for insider trading. This conviction came down recently. Mohammed Zina, who worked for the bank's conflicts resolution group, was found guilty of insider trades struck between July 2016 and December 2017, making about $176,000 in profit. So he's going to do 2 years of jail time for $176,000 in profit. Somehow that doesn't seem worth it at all. And I imagine that he'll be barred from being able to work in the industry. The maximum punishment is 10 years. And imagine some of those profits, yeah, they'll be clawed back as well. So it's never worth it. Finance is one of the most regulated industries on planet Earth. So, you know, even when no one's looking, you should be acting in a way that you are comfortable with standing behind. Because at the end of the day, that's what defines you as a human being. Your conduct, your ethics, your morality. See S&P pulling back up here to this VWAP point of control convergence level. We did touch right on S&P 5000 or ES. Let's call it 50, 16, and 75. That's where the delta is if we want to get real granular and precise. We got a clean bounce there. So far, buyers are saying, okay, we like price there. We're willing to buy from there. I remain adamant that that is a very important level, and I'm not alone. you can see the conviction from the most active put transactions happening at that level again today, a theme that is continuing from yesterday. Let's take a look at our friend the NASDAQ. Just not getting off the mat, really. Completely different look than what we see in the S&P, which looks more constructive. And the Russell. I mean, look at the Russell off of its lows. And rates continue to be supportive for these tech stocks. So I think this is more a story of just outlandish bullish positioning causing a bit of a pull in those same. Now, eventually that NASDAQ weakness may catch up to the S&P. I would be paying careful attention to how we trade here because, again, as I mentioned, the NASDAQ tends to be the momentum leader. It has been for really the better part of 10 years, but most especially important, we've seen it be a momentum leader post-COVID and post-October 2022 lows. So where it goes, it tends to pull the rest of the market with it, particularly given that those heaviest weightings in the NASDAQ make up about 40% of the index, if not more, probably more now since they've grown. So we'll see if this recovery that we're seeing in the NASDAQ can continue. I like to look at that microstructure and really look for a series of higher lows and higher highs on that very short time frame to say that we've got room to start moving higher. And the S&P suggests we could do that, but there's really not a lot of conviction in this buying yet. Meanwhile, we do have a bit of a redistribution of options participation. The hot call just by maybe several hundred contracts outpacing the most active put. That's why we see the plus there. That's telling you that's the most active strike now by about 1,000 contracts. That plus is telling you it's the most active strike, but that there's still more volume in puts than calls across the broader S&P options complex. And the midpoint still showing on screen here, moving right back to the point of control and VWAP on account of those most active options flows being within about 20% of each other in total volume. And so no coincidence that the midpoint ends up being the area of balance where the point of control and VWAP are. This is why this can add to our conviction as to how important certain levels may be. I wouldn't be terribly surprised to see us pull up to that midpoint, and then I think that'll be, again, a pretty important pivot level. Get a sense as to whether there's the conviction to keep moving higher here. We do see some liquidity building both above and below. And that, remember, look at that event. Remember when we talked about PPI, if you were here for the stream, and I showed that pocket of no liquidity? Here it is again, not as dramatic, but the same exact look around University of Michigan data. This is, again, why trading these events can be perilous, because your fills, whether it's on a stop, a buy, a sell, whatever it might be, are not necessarily going to be as good. You could get more slippage in that environment because there's just less liquidity in the book. Taking a look at the NASDAQ here, it is starting to build back from its lows. You've got a decent resting offer here at 17,900. In the cash session, the S&P is down just about 1/3%. NASDAQ down about 0.75%. Russell really building off of its lows, though. That's really where the strength is here today in terms of intraday recovery. Remember, we went into today with Russell looking pretty hammered down, and it's managed to come back, and I think a lot of that has to do with hedge fund short covering as they're getting beaten up on their NASDAQ stocks. And then over here in rates, well, look at that. The tier has pretty much come back to where it was pre-PPI. Shy maybe a little bit. So rates market saying, you know what, that PPI print, not a big deal to us right now. That should be supportive of equities. We will see. And you can starting to see a little more volume come into bid on the S&P here. Again, that midpoint and that convergence between the midpoint VWAP and point of control, that's a really important area. That is the intraday pivot. When we get below it, you can see sellers get much more emboldened. I think the opposite will be true if we're able to get above it. You can see all day today it's been weighing down on price as we've seen it pulled lower and lower by sellers. So let's see if the opposite is true, if we're able to get a move above, if that builds for continuation and upside momentum. I would think it would, particularly because you can see that as you get higher, you're going to have more and more sellers off sides. This session volume profile here shows you there is a lot of selling aggression just around this block of trading near the midpoint. The further above we get from those levels, and even some of these down here, the more that buyers that transacted down here are on the right side of the tape, and the more that sellers will be on the wrong side.
So looking now to the fear and greed index, currently sitting at 73 out of 100. That indicates greed, while the crypto fear and greed index is 72 out of 100, which indicates greed as well.
NASDAQ actually starting to look a little more constructive here. We talked about higher lows and higher highs, and you can see exactly that pattern playing out in the microstructure of the NASDAQ, right? We can zoom in a little bit, and you can definitely see it more clearly here. Here's a higher high, higher low, higher high, higher low. Didn't quite get it here, but I wouldn't look too much into that because we got another higher low and then built a new higher high. So overall, that microstructure looks constructive. S&P has a somewhat similar look, albeit not as pronounced. And I'm going to hop off the stream around 10:30. I like to cover the first hour of trading, and then when there's major events, you know, the pre-market stuff is fun. But I will be live streaming again, probably later today and certainly next week, so be on the lookout. But yeah, I'll be on here for about another 10 minutes, and then I'm going to wrap it, take a break, do some coding, and start building some of these new features for our Discord. If we do, you know, get rejected here, we're not even able to make a determined push above this midpoint, then that's not going to look so good for the buyers here. So let's see if we're just making a higher low here or something more important is starting to play out. I'd be watching the NASDAQ most closely for that. Russell also getting a bit of a pullback here. Crude oil, yikes. That's down almost 70 cents from its highs. And the 2-year note, like you wouldn't even know PPI happened. Those yields have come right back. Those prices have come right back to where they were before. S&P, a bit of a pull here, making a new low. NASDAQ, not quite. I should say a lower low. So not a lot of conviction from the buyers on the way up. You can see the volume's kind of muted down here. Would have rather see that build and then start to make a move above this midpoint and then build more acceptance and consolidation. We're not really seeing that. So not the best look so far. NASDAQ sellers have pulled down that point of control too. That is a bit of a bearish look. And we are now making, let's say we're testing that recent low. Yeah, that's not looking so good. Now pulling below the point of control for the NASDAQ. Seeing some liquidity thicken up below us here as well at 17,700. And S&P, same look. You know, you got liquidity building below us and we're pulling, making new lows. So that microstructure uptrend is breaking down. And then just putting in a bit of a lower high here. So if we make another lower low from here, that's a reversal lower just based on microstructure analysis. You can keep it pretty simple looking at these intraday trends. Russell pulling down below the point of control now, testing VWAP. I have no idea what the heck that was. That came across one of the news squawks. Sounds a little alarming.
Iceberg ESH for CME sell at 5,024.5 crossed 500.
Got about 4 minutes before I'm going to hop off the stream. I want to thank everyone for tuning in. Hope this was helpful to your trading day, learning a little bit more about how I approach the markets and some of the tools I use, including tools I'm building myself, like this SPX options visualizer that's now available on the Bookmap Marketplace. Of course, folks are always welcome to check out my work at Traderade, and you can get a 20% discount using the coupon Mayhem20 at checkout for our Traderade Plus plans. If you like Bookmap, go to traderade.com/bookmap. Scroll down to the specials. You can get up to 40% off So lots of discounts as a reward for folks that are tuned in. Feel free to use them as you'd like. These are offers that'll be on the table for a while. And we do see that new low being made in ES here. Let's see if NASDAQ is confirming. Indeed it is. So not the best look, particularly with rates providing relief, that stocks are pulling lower here overall. So we'll be watching this pretty carefully. I'll try to hop back on in a little bit, probably this afternoon after lunch. Lunch is kind of boring in terms of trading the markets unless there's a big catalyst. So more likely to come on later in the day, probably last hour or so, where things get interesting again. Really had fun hanging out with you all, though. Always do. I really enjoy this. I joined social media in the world of finance to learn, to share, to meet new people. And so that's what this is all about. I have a lot of fun trying to help folks out, try to help them gain an edge in trading markets. I know it's not easy to trade. It's a really, you got to do a lot of emotional and psychological gymnastics. And so one of my goals is to try to help folks out because I've been doing this since 2005. So I've been at this for about 19 years. I didn't just start during COVID. I don't just trade lottos and hope for the best. I develop systems, I write code, and I trade sometimes like a maniac and sometimes not at all. It really just depends on what opportunities are in front of me. But everything always has to fit my system for it to qualify as an opportunity. So thank you, folks, for tuning in once again. Appreciate it. This has been Markets and Mayhem streaming live on Bookmap, showing off the SPX options visualizer I built recently. If you find it useful, you can find more info pinned to my profile.